Show, excuse me, Mortgage Talk. I am your host, Mark Hairston, and I'm really excited about our guest today. If you've been on the show with us the last couple of weeks, we're doing a three-part series on credit scoring, credit repair, things like that, the impact of credit as far as getting a mortgage loan, primarily mortgages, but credit's going to affect all sorts of areas of your life, not just mortgage financing. So I'm really happy and excited to introduce my friend Lisa Love Berry, who I've known over the years in the mortgage space.
Yes.
She was originator for a long time, as I am. We were friendly competitors, and she shifted her focus here in the recent past. I mean, recently, to more of a business to help people with their credit. So I want to welcome Lisa and tell me a little bit more about your background.
Thank you, Mark. It's good to be here. I'm Lisa Loveberry. I'm the owner and client advocate of Fair and Square Credit Repair.
I like the name.
Yeah, it's pretty catchy. Anyway, that's a whole other story on how I came up with that.
Yeah.
But
We have time.
I did spend 17 years in mortgage finance and origination. Also as a branch manager, but I did a lot of credit repair for clients starting out. I felt that, God gave me this this gift of serving others, and I never turned anybody away. So whether they needed a credit boost or full credit repair, and it took a month or a year or over that,
Yeah.
I stuck with it. And I managed to get people into homes that might have been turned away or might have gone to a credit repair company and either had a good or a bad experience. And so I felt that after leaving the industry last year in December, I decided to go 100% into credit repair.
Yeah, I love that. Well, I've known of you more so than known you over the years, but you always had a great reputation in the mortgage space, which is kind of rare. It's an interesting industry by itself. And then you reached out to me about your new business. I said, well, Lisa will be perfect to speak to this subject, because I think it's such a big part of the qualifying process, and really improving credit also obviously helps your interest rates and fees and insurance costs and all sorts of things. So kind of tell me a little bit more about what motivated you to get in the industry. You said a little bit.
Yeah. So I feel like, when I was doing loans and, talking to people, I was, more referral only, working with agents. And I still had this desire and need to continue serving others. And I would get calls from clients, even though I left the business, that might have wanted help. And I would just discuss a little bit about what their scores were, what they were doing, and maybe put them with a loan officer. And, and then telling them I was no longer in the business, that was kind of painful.
Sure.
But I wasn't so much driven by the money side of it. I was more driven by what someone's dream was and what they wanted to do. So I felt compelled to continue in the financial services industry by helping them in a different way.
I love it. So it's not really a ministry in the truest sense. It's not a nonprofit.
Correct. It's not.
I mean, you make money at it, but
Correct.
At the same time, it's such a valuable resource because it's not one of my strong suits personally.
Right.
Right. And I've always appreciated people who understand the credit system in a deep way that I can refer people to that really need your help.
Correct.
And credit repair is a term that's been around a long time. I like to almost think about it as credit restoration in a way.
Correct.
To help people understand the impact of credit scoring, not just in mortgages again, but how they can improve their lives generally speaking.
Correct. Correct.
So what are give me a little bit of the overview of the credit repair, what credit repair entails.
Correct. Well, so there's a lot of misconceptions about, credit repair. And, some people say just go dispute everything. It could be your debt. And if you do that, coming from the lending world, we know an underwriter can require you to remove those
That's
disputes.
right.
It may boost your score a little bit temporarily,
Right.
but it's still your debt. And so credit repair is really basically just repairing inaccuracies.
Mhm.
So it's repairing things on your credit report that may not be true.
Mhm.
Those are, and there's a lot of them, believe it or not.
I read a stat that's something like 70% of the reports have some
inaccuracies, and
that's amazing.
Those
stat.
are true credit repair.
Yeah.
Dispute is totally different, and those, it's still your debt, so you have to find a way to not only repair the inaccuracies, but get rid of some of the collections and repair some of the true collections, or what should I say, like the credit late payments, debt.
Yeah.
It may or may not be yours.
Right. So if you were to challenge, I think what you're saying, if you dispute your credit, and anybody can dispute a debt,
Correct.
or a late payment or whatnot.
Correct.
And the fact is, if you dispute it, it may temporarily increase your scores. But if you're going to get a mortgage loan, the underwriter's going to say, "Hey, you've disputed this. We need that cleared up before we're going to move forward."
Correct.
Is that right?
Yes.
Yeah.
And they could require you to pull a new credit report after it's removed, which could send your score back down. And then you're in the process of trying to qualify for your dream home. And then all of a sudden your score drops and now you're panicked. So a dispute is not always the best route to go.
Right. Right. And can you speak to a little bit about what a hard pull is? Because people ask me all the time, I don't want you to do a credit report because it's going to hurt me.
Right.
And I try to explain to them as best I can that how it works in the real world. But tell us more about inquiries, if you will, or mortgage inquiries.
Yeah,
Sure.
so that's a good question, because credit inquiries can count for 1 to 2 points on your credit report.
That's what I tell them.
Within, you have a time limit. So people say like 3 weeks to 30 days on getting a mortgage. That's true. But if you go, apply for a credit card, apply for a car loan, the car loans are the biggest ones because they pull your credit so many times to get the deal you want.
Right.
And that can count for 30 or 40 points on a credit report.
Wow. I didn't know that.
Yeah. And it's huge.
That's good to know. So we talked briefly about the overall financial picture of people as relative to credit scores. And there's more to it than just, like I say, getting a mortgage. What other areas does credit impact people?
That's really good, because, the statistics show that, a financial burden is one of the leading causes of divorce in this day and age. And it can affect, what you pay in an insurance premium for your car. Lower, credit scores can result in a higher interest rate. So money paid over time, the, credit card interest can go up. And honestly, the credit card companies, these big banks, they monitor your credit. And people don't realize that, but they pull soft credit pulls on your credit.
Regularly?
They do.
They
do. And the issue is, if you are if your credit score is dropping because you're carrying a lot of debt, they can lower your limit.
Okay.
I
knew that.
If your credit score is going up, they can increase your limit. And they don't always tell you they're doing it. They just send you a notice saying that, hey, we're decreasing your limit or we're increasing your limit.
Yeah.
So it can burden families, with a higher interest rate.
So they can reduce your available credit lines.
They can.
Let us say a credit card. Let's say Visa as an example, or whatever.
Yes.
Let's say you have a $20,000 Visa limit
Mhm.
and you owe $10,000,
Correct.
and they come back and say, well, we're going to lower your limit to 12,000 as
Correct.
an example. So your score would go down.
Correct.
Because your debt would be so much higher.
Correct.
Relative to the,
Yes.
Yeah, that's tragic. and so I didn't really think about that. I knew that happened a lot during the crash 08, 09, 10
Mhm.
in there. They were doing that a lot. Remember, they would close accounts.
Right, correct.
But in the last few years, we may see that again because the economy is somewhat suspect, and
Right.
there's, I think, record amount of unsecured debt right now. It's like
It's
$1.2 trillion.
it is. It's the highest it's really ever been.
Ever been.
Yes.
And I'm contributing to that right now.
Yeah.
Just
You
saying.
and everybody
saying.
else. Yes.
So,
But think about 29% on that debt. That's
I
going
know,
directly
I
to the
know. It
bank.
keeps me up at night sometimes. But speaking of interest rates, and I haven't done this personally, but some of my cards are like at 17%. I have like 10 open lines of credit.
Right.
Not revolving credit.
Right.
Some are like 17, or some are like 29.
Right.
Can you negotiate that?
You can negotiate it, but they have the right to decline it too.
Right.
But as my client scores go up, when we're working through credit repair, I inform them to call their insurance company. Their scores are better. See if they can get a better premium. Call their credit card. Call their banks. See if they'll reduce the interest paid on the debt. But as you know, as the Fed continues to raise short-term rates,
Right.
it affects auto loans,
Right.
credit card, interest,
HELOCs.
Mortgage, HELOCs,
Yeah.
everything.
Yeah. It just seems like credit cards always have this sort of not monopoly, but they've always been priced pretty high.
They are.
Because I guess
Yeah.
there's a lot of risk in unsecured debt like
Correct.
that.
Correct.
So let's talk a little bit about success stories. Tell us what you've done in the past with other people that you could say, well, we did this or that helped
Right.
them, and
Right.
how we helped them.
Yeah,
save money.
that's good because I recently in February worked with an attorney in Austin who had contacted me. He had some challenges with 30-day late. So he had a 30-day late that became a 60-day late, and he was in the process of trying to buy a house. And so he was told by his loan officer, which, this is par for the course with credit repair companies, is he was told you'll have better luck doing it on your own. Go do it on your own. Well, not everybody knows the verbiage.
Do what on your own exactly?
Fix the credit lates on your own. And so he tried that and he did not succeed. And, he wrote letters to the creditor and, basically, not threatened, but he's an attorney. He was a little harsh.
He could put some language
He
in
was, he was harsh. And so then he was referred to me and I said, okay, so you've already tried this. Send me all your documentation. We're going to go directly to the bureau.
Yeah.
And by law, the bureau has 30 days to investigate.
Okay.
Well, it turns out that the bank was in the wrong. And, he ended up getting both. We got both of the 30 and 60 days removed.
Wow.
His score jumped 101 points, and then he started looking for a house.
Wow.
Yeah. So, that's something that people can do on their own.
Yeah.
But they don't always know the verbiage, and they don't always know, do I go to the creditor? Mm-hmm. Do I go to the collection company? Do I go directly to the bureaus? Mm-hmm. There's a lot of ways that, you can work it. And then I had another client, she, had been in credit repair. We've been fixing some things, inaccurate things. And she had gotten this letter from a company with a $4,000 debt, and she did not recognize it.
Wow.
And it had her name on there. So she sent it to me, and I made the call to the collection company, and right away they were very defensive. They said, oh, it's her debt. And I said, well, let's look at this. And so once we broke it down, they had her first name, her last name, but a different middle initial, and they had a different ending social.
Okay.
And so then they said, oh, this is a different person.
Yeah.
So those are true inaccuracies, and they removed it from her credit.
Yeah. It went up just like that.
Yeah. Imagine panicking that you have this $4,000 debt that you don't know where it came from.
Yeah. Share a little bit about it. Let's use collections as an example.
Correct.
Let's say you had a credit card or somebody had a credit card that they didn't pay and that it went into a collection account.
Correct.
What I understand is these collection companies can resell that debt.
They do.
And then it looks like it's more of a current debt. But don't you have to go back to the original collection?
You
And
do.
after a while, it has to fall off. Is that right?
It does. So, it typically takes about 7 years for it to fall off.
Okay. From the original
From the
collection.
original date of last activity is what they call it.
Okay.
So the last activity date, and I write letters, to the bureaus, because I've seen things stay on people's credit report for 8, 10, 13 years.
Yeah.
Because they miss it.
Yeah.
And so we just write letters to get it removed.
Okay.
But if it's a true collection, we can settle the debt for 50 cents on the dollar
Or less.
And I write those letters to negotiate. I call.
Mhm.
We've had people pay in full, and we've removed the debt completely for like apartment complexes and stuff.
Okay. Somebody who maybe broke a lease or something.
Yes, that's
Something like that.
correctly.
All
Mhm.
right. Well, let's make sure that the folks understand how to get a hold of you if they have challenges or they have questions they want to ask. So tell us your
Yeah.
number, email.
Yeah.
Whatnot.
So if anybody has questions, we do a 20-minute free consultation. They can reach me at lisa@fairandsquarecredit.com, 512-839-7879, or they can go to our website, sign up for a free consultation. That's www.fairandsquarecredit.com.
All right. Lovely. And so timelines is always interesting because I know it's impossible to say how long it takes,
Right.
but give us some examples of, sometimes people come to me that really need some help,
Right.
but they want to buy a house, next month. Their lease is coming due. I said, well, I really can't help you, but it may in 6 months I can, if I refer to Lisa,
Yeah.
as an example. On average, give us a timeline and maybe a little bit about cost too, because that's
Correct.
going to be a big question. What's it going to
Yeah.
cost me?
So
Well, it's going to cost you a lot if you don't fix it.
correct.
I
I
can tell you that
mean,
much.
yeah, not fixing it is basically hiding your head in the sand,
That's right.
and it's very costly. So it depends on what the profile
Mhm.
of the credit report looks like. If somebody's down in the low fives and everything is disputed and everything is a collection and there's no positive accounts to help bring the scores up, it could take a year or more.
That's what I thought.
But if it's
Is the first step to start getting better credit, getting new
yes,
credit
yes,
established?
I always recommend, sometimes it's hard to go back in the past and, clear up some old stuff that's
Yeah.
not going to help your scores.
Right.
I recommend getting, little at a time, getting up to 3 new trade lines, which are new accounts, whether there's a lot of banks that do build programs. So, I could always make recommendations in
Is
the
that called
future.
secured credit cards? or something,
Secured
where you
credit
put up some money
card,
and you have a line basically on that?
secured credit card. There's companies that do report that don't pull your credit. It's a CD, so they do CDs. You
Okay.
pay in monthly. And then once you've got 6 months of that secured credit card, they actually send you your money back and give you an unsecured card.
Oh.
And that helps you. And
Is that rated differently?
it is. It's rated a little bit higher because, it has probably a little bit higher of an interest rate, but because they're trusting you,
Yeah. 'Cause you've made payments for 6 months.
because you've made perfect payments for 6 months and you've kept the balances low, those are always rated a little bit higher.
Are there any banks out there that or any creditors, I should say, that are easier to establish credit than others? Like Capital One, I've always heard was one that you may
Yeah.
want to start with.
Yeah. Capital One is good. There's Discover It.
Okay.
That's a good one to start with. Self.Inc. That's a CD. You pay into it for 12 or 24 months, $25. They take out their fees. They send you your money back.
Okay.
But they report to all 3 bureaus per month, and it's good.
Speaking of that, are there? I had a report the other day from a client. I hadn't seen this in a long time, but he had a lot of utilities reported
Correct.
on there.
Yes.
and or his rent payment, things
Yes.
like that. I didn't realize you could do that.
Yeah, so you can ask the apartment complex, and you pay for that service.
You do pay?
You do. You pay a
How
month.
much is it?
I think it's like $6 to $8 a month,
Okay.
but they'll report your perfect pay history.
Okay.
But don't break the lease or don't do anything
Yeah.
because they
Or you're
report that
toast.
too.
Yeah.
But the same with utility companies. It's considered self-reported.
You have to pay them too?
Yeah, I don't know. I don't think you pay them, but
Okay.
you can request that be reported.
Yeah.
And I think they only report to one bureau because it costs money for companies to send in
Yeah.
reporting.
That's how the bureaus make their money.
Correct.
Yeah.
Correct.
Okay.
But those are good.
I just
They
didn't
help.
know if they actually helped scores.
They do,
They do?
especially if you pay it perfectly.
Okay.
They do.
That's
You don't
that's a
count
good
it.
point.
You don't count it in your debt, for
No,
lending,
no.
but it does help their credit score.
Yeah, he had utility payments on there and
Mhm.
rent and anything. He had like a phone bill or something like that.
Yeah, yeah.
Yeah, I hadn't seen that in years. I forgot about that, to be honest with you.
Yeah.
So let's talk about costs. One of the people, because they asked me, and I said, I don't really know. Call her.
Yeah.
I
So
only know what I know
so
because I don't get involved in it.
yeah. So on average, it's going to range between like $79 to 300 plus.
That's pretty reasonable.
I've seen higher. It is. So my fee is $99 for initial upfront action plan, credit review,
Okay.
letters written. If we have to extend past the month, I charge $59.
Okay.
Yeah.
That's very reasonable.
Yes.
Yeah. Interesting. So there was a question I was going to ask around that. What was it? Let's keep going. So talk a little bit. Here's my question. And I've been in the mortgage space for a long time, and but I've always looked at credit repair like mechanics. There's
Yeah.
good ones and there's bad ones. It could be any
Yes.
industry. I'm not
Yeah.
knocking mechanics.
No.
I've just had different experiences.
Right.
It could be lenders. It could be plumbers. It could be anything.
Correct.
So tell us a little bit about the distinction between, your value proposition versus maybe some of your competition.
Sure. Thank you. That's a good question because there's a lot of credit repair companies out there
Mhm.
that
I know.
don't do a very good job at all. They don't take your calls. They don't respond. They take your money every month and then they don't do anything.
Right. I've heard a
Um,
lot of complaints. That's why I'm
that
asking.
it is. It's a huge issue. And to be honest, like there's, regulations that are trying to do away with our industry. And
Mm.
that's tough because you have a lot of good people that do a lot of work. And some companies, some credit repair companies just tell you what to do. You write your letters, you send it off, you do all the work, but they keep the money. And that's hard for me because they don't know the verbiage. They don't know who to send it
No, they
to.
don't.
They don't know what to write in there. When it comes from a company, you tend to get a little bit more done than if it comes from an individual.
Yeah.
So there's just a lot of bad apples. It's a $4.2 billion industry.
Wow. I didn't know that
It's
either. That's
huge and growing
And growing.
and growing as the economy changes and
Right.
things are happening. There's a lot of things that can lower your credit score, and that's high debt, and there's missed payments.
Mhm.
There's a lot of things, and
Mhm.
there's just some people that don't do a very good job, and it's kind of like realtors get a bad rap from a bad realtor or loan officer,
Sure.
but same with our industry. If you don't, if there's a lot of companies that are basically taking money and not doing the work, it gives us a really bad name.
It's kind of like before the show, we were talking about technology and video marketing.
Yes.
Like I can do a video, but I'm
Yeah.
not going to edit a video.
Yeah.
So I hire people to do that.
Yeah.
For me. So
Yeah,
you're my
yeah.
credit editor.
Yeah, yes,
Is what
exactly.
you're going to do.
Yeah,
Okay.
exactly.
Yeah. That's pretty funny. So talk a little bit about advice for somebody starting. It could be young people or maybe folks like I had a young couple. Well, they were in their 30s. They weren't that young,
Right.
but he didn't have any credit score at all.
Okay.
Okay.
Mhm.
Because he was of the Dave Ramsey thing where you don't use credit.
Yeah.
And that's
Yeah.
going to hurt you too.
Right.
So
Right.
talk a little bit about the
Well,
credit journey of starting out,
yeah,
or
that's good because credit building when you're starting out, you can literally, I mean, if you have parents that may or may not know about the credit industry, your parents could actually get you a credit card at age 16,
okay,
put you on as an authorized user, helps you build until you start building. It can take 6 months to generate a credit score from
from the
start,
beginning.
from the
What
beginning.
about if you use an authorized user today? Would it
That
take 6 months still?
no,
Or would it take
no,
30 days or 60
no,
days?
immediately
Immediately?
you get access to their credit history.
Okay.
Which is really important
It's huge.
because that you could get. Are we running out of time?
We are
Yeah.
wrapping it
Anyway,
up. I
but
was so intrigued.
yeah.
I forgot that.
But I do want to go over that last question.
Where we're out of time.
We are?
Yeah, you see, it says 24 seconds.
Oh no.
Yeah. So we'll come. We may
Okay.
make a part 2.
Yeah, that'd be
But
fun.
I really enjoyed it. Tell us one more time how to get a hold of you.
So you can reach me at lisa@fairandsquarecredit.com,
Okay.
512-839-7879.
All right. Well, that's a wrap. Thanks for coming.
Awesome.